FDI rules with a host of contractual features, and the change in RBI's view on put and call option in the Tata Docomo case is a step in that direction.
We are open to foreign investors. We welcome them, which is one reason the FDI action we have taken today, that is these put call options that were embedded in various investments. We've said we're not against them. We just want to make sure it's not hidden debt. So if you have a put option, but the put option is at a price which is lower than what you invested, so you don't get a guaranteed debt return, we're okay with that. So we're trying to make it easier for foreign direct investment. There are other features that were earlier not favored, which we will open up as we look into this and come out with a detailed paper. But the idea is to make it easier for foreign direct investment, even with a variety of contractual features that would allow these investors to put money in.
Okay, and let's also listen in to what some of the economists as well as bankers who interacted with us post the policy had to say about Raghuram Rajan's move.
This gives an indication to the government that the Reserve Bank will support investments in the country, and that when these projects come in and are ready to get off the ground, there will be enough liquidity in the banking system to support these projects.
Along with inflation, RBI would also look at what's really happening on the ground level, and maybe, would wait for that, for having a deeper cut, because if you really changing your stance and inflation is surprising on the downside, we do expect almost like 100 basis point cuts, so of which 25 has come as surprise in mid-January.
One is the extent of the GDP revision and what the advance estimate comes out on February 9th. And the second is, as Dr. Urjit Patel pointed out in the press comments, the new based CPI and what is the CPI data that comes out. So basis that, the market would probably try and form fresh expectations in terms of the rate dynamics.
While we do expect a 25 basis points of rate cut somewhere between March and April, we might think of a 25 basis points of rate cut additionally in the rest of the year, provided we do see fiscal consolidation pretty strong, and in addition to that, the disinflation process stronger than we expected so far.
If inflation falls, and it is likely to, because global commodity prices are very low and Indian food prices are also under control, so I expect there will be further rate cuts.
Okay, let's take a quick break right here on the show. Come right back, because still ahead there's more disappointment from the third quarter earnings. PNB drags, Lupin underperforms. We get you the details on their numbers in just a bit. Welcome back. This is Business Day, and let's focus in on the market action. And what a choppy day of trade it turned out to be, with the selling pressure intensifying. By the time we shut shop, it was 87.65 on the index. You had the Sensex 2, which ended in the red, and we shaved off just about 122 points to end just at that mark of 29,000, which we clasped onto. Broader markets, well, the road was not easy for the mid-cap end of the market. Neither was it for the small-cap index, but that ended just about flat in trades today. Let's point out some of the big sectoral losers, and the Bank Nifty futures, by the way, has been shaving off 1% almost every day for the last 5 trading sessions. Today was no exception. In fact, it saw a big hit of about 3% in today's trades, ending at the day's low. You had the real estate basket too, which came under pressure. FMCG and oil and gas, though, saw a spark of green. So no surprises to see PNB coming under a fair bit of pressure on account of an abysmal set of numbers. Axis Bank was another casualty. You had Tata Power deep in the red, and it was the case with Bajaj Auto. Lots of big earnings. The focus, remember, today was a lot on the large caps. We'll focus on some of the important ones earlier, but ACC consolidated profits coming in higher by 17% at 326 crores. The top line growth was just muted, and I think that's largely what the street read into. Margins came in at 8.9%, and remember, it was boosted by a one-time tax gain of 184 crore rupees. TVS Motor, meantime, and the profits were up 30% at 90 crores. Sales growth was up 29%, and the margins came in very unchanged at 6%, and that's why clearly the stock didn't react too much. NHPC, 180 crores is what they delivered in terms of the profits. The sales were at 1167 crores, up about 4%. Videocon, that was in focus as it announces this year's largest discovery of petroleum by a consortium. Operator Petrobras made an oil discovery in Brazil's Seal 11 block. You had Cesar Sterlite iron ore prices rebounding to levels of 77 per ton. That kept it fairly active. CLSA maintained a buy on Tata Motors, raising the target to 740 from 610, saying that the improved JLR margin outlook is going to bode well. CLSA also reiterated a double bagger buy for Reliance Industries with a target of 1250, saying that the stock is building in a $13 billion negative value for telecom, and that's already factored in. Blue Star, meantime, seeks the members not for the sale of its business to a unit for 111 crore rupees. Some of the top index gainers, well, we flagged off Cesar Sterlite. Ken India held out pretty smartly. Bharti Airtel, by the way, is going to put out its numbers tomorrow. A day ahead of that, it was fairly strong, and RIL shut shop at 937 levels. Well, let's get in a view then from some experts, and leading market expert Jim Walker of the Asianomics Group is extremely bullish on India. He feels the India growth story is the best among its global peers at the moment.
We remain very firm India bulls. We still think that this is the best story in the global economy at the moment. It's our highest conviction global strategy call. And I really would say to most investors, offshore investors anyway, that they should just be looking for ways to get into India, increase their exposure there, and hold on to it for 5, 6, 10 years. The bond market has rallied really strongly. It more or less anticipated what we were going to make as one of our, again, high conviction global strategy calls, but it moves so fast that we turned again to the equity market, which I think has got now more upside as a result of interest rate cuts.
Meantime, although the markets gave a thumbs down to today's RBI policy, financial market experts were in sync with the RBI's move. In fact, UTI AMC Managing Director Leo Puri says that the RBI and the government are on the same page when it comes to interest rates. Let's hear him out.
I think both the RBI and the government have been very clear. So today's announcement is very much in line with expectations. And the view is that